Welcome to the Diary of an Apartment Investor podcast. I'm your host, Brian Briscoe with Streamline Capital. Very excited for today's show. We have a repeat guest, Jens Nielsen, on the line. So, Jens, how's it going?
Doing well, Brian. I'm excited to catch up. It's been a couple of years since our last recording, I think.
It has, yeah. It's been a while. I think the multifamily conferencing thing kind of dried up a little bit. I used to see you several times a year at various conferences, and yeah, that just hasn't happened in a while. But anyway, yeah, great to catch up. So let's do the listeners a favor first, and let's go into your background. Tell us a little bit about yourself and how you got into real estate.
Absolutely. So as people may recognize, I have a foreign name and a slight accent.
Mhm.
Actually, this year is 30 years since I moved to the United States. So
Nice.
I'm still working on that accent, but it's largely disappeared. But yeah, did the typical thing, right? Got an
Hmm.
education, got my undergrad, my graduate degree, in computer science and
Yep.
so on, right? And I thought, work for the rest of your life and save in the 401k and, be a
Hmm.
happy camper. And it worked out great because, it allowed me to, live a decent lifestyle. IT is, going
Yeah.
through real estate, so I have to do telecommunication and IT and did that for many years. But then in my mid 40s, I was like, wait a minute, do I want to do this another 20,
Yeah.
25 years? And I was like, the answer was kind of no. I had to change, but I didn't know what the new path should be.
Hmm.
And I looked around, everything else looked like a job. I stumbled on real estate like
Yeah.
10 years ago. I actually bought my first property in 2016. So
Hmm.
10 years ago, stumbled on that and really fell in love with, real estate
Yeah.
and rode the waves and all that stuff. So that's basically a little bit about myself. Moved around the country from the East Coast
Hmm.
to the Southwest. I've lived here in New Mexico and Southern Colorado for the last 20 years, actually. So
Nice.
I like the sun out here.
Yeah, the Western US, beautiful area. I mean, I don't know why more people don't live out here. So, yeah, and for people listening, I'm in Utah, New Mexico and Utah do share a little bit of a border, very little. But yeah, very, very similar scenery from southern Utah to New Mexico, Arizona, southern Colorado. It's absolutely beautiful. It's what you see in a lot of Western movies, actually. But that aside, let's talk about that first deal a little bit. When you said you stumbled into real estate, let's talk about that first real estate purchase that you made or that investment that you made in 2016.
Yeah, so a lot of people, they go the single family route because,
Hmm.
oh, that seems comfortable and familiar because,
Yep.
we live in a house. And I was living in southwestern Colorado in a small mountain town called Durango. And
Hmm.
if I looked around, every house was, three, four, $500,000. Like that's never going to cash flow, right?
Yeah.
So I had to get out of my town. So that was either going, west or east or south. And I was like, well, I don't want to drive an hour and a half to a property that's a single family home
Hmm.
to make 200 bucks a month, right? That just
Yeah.
didn't compute. So I was like, okay, let me just expand. And I decided to go start investing in Albuquerque, New
Hmm.
Mexico. It was roughly 3.5, 4 hours away,
Yep.
but it taught me, I mean, I kind of stumbled into this. So it taught me to become an investor, not an owner
Hmm.
operator, right? I think that's huge, right? Because a lot of people buy, stuff locally and they
Hmm.
just try to do all the work themselves and they can't scale and they just like, I have
Hmm.
5 houses and it takes all my free time.
Yeah.
So I immediately went to, or for my first purchase, I wanted to buy, so I wanted to go to multifamily, fourplexes, 4 units, which
Hmm.
was still good on the financing. You can do residential financing and so on. So first property was in Albuquerque, New Mexico. It was 4 units. I think we
Okay.
paid $115,000 or something like
Wow.
that. I remember this
Wow.
is 10 years ago. Low quality property in a low, what do you call it? Class C minus neighborhood, right? But it
Hmm.
got me started and it got me to like really start seeing what real estate can do for you.
Nice, nice, nice. That's something you mentioned really kind of hit me, and I talk with a lot of people, it forces you to look at it from an investor standpoint. And I think that's awesome because you're absolutely right. A lot of people will buy something local and for one reason or another, they're just going to go straight to, fix the DIY model. So yes, 2016, let's fast forward, how long did it take you to get into try to scale? How did everything progress from there is what I'm asking.
In the first year, we bought actually two fourplexes and 11 units. So we got 19 units in the first year. And that was our rest of our money. So me and my wife, right, we had saved up some money. So we put a lot of our capital into that. And I started realizing that, okay, I can't buy it on my own dime. Yeah, I could,
Yeah.
but it would take, many, many years to scale in any meaningful way. So that early on, we decided that I had to move towards
Hmm.
using other people's money. I don't like to use other people's money, but I had to bring on
Yeah.
partners to accomplish a goal of scaling. And at that point, I also
Hmm.
realized I wanted to build a business, not just investing for myself. I want to build a
Right.
business that allowed me to leave my job because my main priority there was like, I got to get out of my W-2 job. I didn't
Yeah.
hate it, but I also realized that I needed to do something else. I needed to see what was possible. So,
Hmm.
we did a joint venture and it took a little while, but that was in
Hmm.
2017, 2018. We did some joint ventures where we
Okay.
brought in some partners. And then, 2019, 2020, that's where really it all kind of started exploding, right? Did
Yeah.
like three syndication in 2019, I think. Because at that point, I had built enough trust that I was able to raise a little bit of money initially, that then that grew, right? But that's where you go from being an investor in your own account to
Yeah.
invest with other people
Mhm.
so that we can scale
Yes.
quicker and bigger, right?
Yeah. Those first couple of deals that you did with other people, were those also Albuquerque or where were those? And how'd you guys split up the goods, so to speak?
I think the most relevant one was in 2018. We bought a 38 unit apartment building in
Mhm.
Albuquerque with some joint venture partners, right? Me and it's actually my broker, him and I, found this deal. It's like, yeah, this looks pretty good. We needed, $600,000 to take it down.
Mhm.
And, I brought some friends in and said, hey, we can partner on this deal. You guys, since it's a joint venture, you need to pay attention to the details, but we'll do most of the work. So that was really that idea. Wow, people want to invest in real estate, but they may not have the time or the resources or the interest in doing all the work. So that's where you can add that value. So that was the first one, a joint venture. We still have it 8 years later, and the thing is a cash cow. We're like, we don't want to sell that thing because it's
Yeah.
just printing money now,
Yeah,
so.
yeah, yeah. Yeah, and if you get a deal like that, I mean, some people will say, why sell? It's different investment philosophies, but yeah, cash cows, the more cash cows you have, the better you're going to be long term. So awesome. Kind of transitioning from smaller to larger deals or more deals, what were some of the challenges you faced kind of building that portfolio?
I didn't know how to go to that next level, right? I mean, I knew how to do a smaller deal with a few people, but I didn't know what did it look like to go out there and actually syndicate a deal, right? Or you bring
Hmm.
on a lot of investors, a GP/LP team. I didn't know what that looked like. So the first thing I decided was I need to get around people that are doing this, right? So sign up for one of these
Hmm.
mentorship programs that I think, you probably did as well,
Yep.
where we basically got around somebody who had, put a program together. I
Hmm.
think the biggest value there was I would study the course, but I would go to the events
Yeah.
and we used to, run into each other at different events. We would meet people, we would really understand what's happening, we would start
Hmm.
finding partners and all this stuff. I mean, had I not gone to these events, I would still be sitting in my house in Colorado trying to figure this out, right?
Yeah. That was
So,
huge for me too. So yeah, I'm glad you mentioned that.
so early on, right? I mean, there's a lot of excitement around it there in the
Hmm.
late 29, 2018, 2019, 2020.
Hmm.
So I would go to events. I was like, okay, who do I feel like I have a connection with here? And then
Hmm.
I would follow up, right? Because it's easy,
Yeah.
because I was in a small town, so I had to make the effort to follow up with people. So I
Hmm.
would say, hey, so and so, do you want to? Are you interested in collaborating on something? Let's meet, on a Zoom call every week or every
Yeah.
month or whatever. So we could keep meeting each other and we could start like push each other towards buying that deal and
Hmm.
all this stuff, right? So that's where it started. The synergy started happening. And in 2019, I met my now partner that we've done a ton of
Yep.
deals with. He's in the Northwest up in Pennsylvania, but there was a good connection there to start doing deals together.
Yeah. That's how a lot of people, that's exactly how my story worked out. Started going to conferences, started, following up. And that's pro tip for anybody, you gotta follow up after those conferences, and that's I think how most people end up, getting places. They network with people, they find people, and you said people that you get along with, people that resonate, and then you follow up, you get on weekly, monthly, whatever Zoom calls, you start collaborating, and it's akin to dating. I hate using that analogy, but you've got to get to know each other before starting a business together. So yeah, great tips on that one. Up front, it was mostly multifamily that you were purchasing. Is that accurate?
Yeah, anything from, the fourplexes that I bought
Hmm.
myself all the way up to like 200 plus
Hmm.
apartment complexes or portfolios. We invested like in a lot of different places from,
Hmm.
Atlanta to Phoenix to Oklahoma to Ohio to Pennsylvania to New
Yeah.
York, right? We started investing in a lot of different markets there.
Hmm.
Since sold quite a bit of it as well,
Yep.
and then we focused in on certain areas because we had the infrastructure there,
Yep.
but definitely expanded it. But all apartment buildings, right? And that worked, as you know, that worked great in up until like 22-ish, 23 maybe,
Yep.
when interest rates started to really go through the roof, right?
Hmm.
Insurance, all this stuff, right? Suddenly we started experiencing some headwinds
Yeah.
that made it more challenging, right? And
Yeah.
since then we've made a few shifts. We're still apartment investors, made a few shifts along the way just
Yep.
to, continue to buy real estate, not to sit on our hands for the
Yeah.
next, several years.
First question is, yes, rates went up, all of that stuff happens. What do you do as an investor to, I guess, mitigate those risks? And then what's your recommendations for handling properties and affairs, while we're going through stuff like that?
Yeah, I mean, wow, I wish I had
Yeah,
had
it's
a
easier
crystal
looking
ball.
back, right? But yeah.
Because we're sitting there in, 3 or 4% interest rate environments, like, oh yeah, maybe it'll go to 5 or 6, right? We didn't expect 7, 8, 9%,
I know,
right?
right?
So,
Yeah.
I mean, the obvious answer is like conservative underwriting, but I really don't know, Brian, because that's a
Mhm.
tough one, right? Who
Yeah,
would have known that it's going to go to this? So I think the
not me.
lesson there is don't buy stuff on short-term
Hmm.
floating rate or bridge debt, right? Because a lot of people can't refinance, right? I mean,
Yeah.
we had to sell some properties at some losses just because we couldn't refinance.
Hmm.
We couldn't sell them because the market was depressed. And we're like, holy smokes. I mean, we could sell them, but not to the price we had hoped for.
Yeah.
That's a tough situation to be in, right? So going forward, the answer is, low leverage, long-term fixed debt. That would be the way to do it going
Yeah.
forward, right? And at the same time, just be really managing the hell out of it, right? Because
Yeah.
managing your expenses, be a good landlord and maintain your tenants, right? And that has also been, as you know, there's been the other headwinds of costs going up and
Hmm.
insurance and so on, right?
Yeah. Yeah, we did face a lot of headwinds in multifamily, and I mean, I think every apartment investor who's, honest will say that they were definitely affected. We still have some properties that we're trying to pull through, but I think you hit the nail on the head. I mean, the properties that we had that were low leverage, that, longer term debt, yeah, I think your answer was textbook, and it's textbook because, that's the kind of the proven strategy. But I was very fortunate, and I mean it. We were fortunate. This wasn't us planning ahead, but we didn't have a single variable rate loan on the books, coming into that interest rate hike. And I was fortunate that we had a local credit union that was matching the national bridge lenders on rates and terms, except everything was fixed rate, so that was kind of like my salvation right there, was having low fixed rate debt, and saved us a lot of time, and never know how much money you'd save, but I imagine it saved us a lot of money too. But all right, now next question. You mentioned you started bringing other asset classes, asset types, so what other types of things are you looking for? And if you could kind of compare and contrast that with multifamily, I'd appreciate that too.
Yeah, because as I said, what do you do, right? I mean, I quit my job 5 years ago,
Hmm.
and I need to continue to find ways to make income, right? And
Yeah.
we sell real estate, and that's how we make money. If we can't sell real estate or syndicate real estate, we have a challenge, right? So while I still like apartments and I'll get active in it again when things start
Yeah.
shifting, we're like, okay, what else can we do here? And we saw an opportunity, and this is incredibly hyper local, I think. But we saw an opportunity in Albuquerque, New Mexico, to go in and buy like I would say, Class B, Class C warehousing or flex space, because there was a very low vacancy in that space, a couple of years ago. They trade at a much higher cap rate
Hmm.
so that you get more for your money versus an apartment building. So I had a partner who had done it for a while, and he, wanted to work with me on a couple of deals. And we've done three deals. So one was, multi-tenant warehouse deal. We did a multi-tenant kind of flex space, kind of garage doors with
Hmm.
with 1,500 square feet behind. And then we did a one single tenant, almost 30,000 square feet apart warehouse deal as well.
Yeah.
So So what's the benefit? I know this is about apartment investing, but I
Yeah.
think, we're first and foremost investors, and I think we should look around a little bit. So I think the benefits that you
Hmm.
can say, there's less competition, you can get them at higher cap rates, right?
Hmm.
Those are some of the benefits of, and you can do triple net, meaning that the tenant will pay,
Yeah.
repairs and maintenance, taxes, insurance, utilities, and so on, right? So you're somewhat
Well,
insulated
management's a
from.
lot easier.
Yeah. Oh my God. Right. We don't
Yeah.
have management companies on because I mean they're there from 8 to 5, and if something breaks, they usually fix it themselves. If it's a major issue, they'll call us. But
Hmm.
it's not like, oh my God, my light bulb is broken, come replace it.
Yeah,
Right?
right.
So there's
And
that. Now the
we have
downside
had
to
that
risk.
call before. The light's not working, and we send a maintenance guy there, and they change a light bulb.
Of course, nothing comes without risk. So I think the downside of the risk there, a couple of things, right? It's always recourse debt because you're not going to get Fannie and Freddie non-recourse debt on something
Hmm.
unless it was like massive. But if you're a couple, 2, 3, 4 million, it's recourse debt. So you got to be comfortable with that. And also the other thing is the businesses, right? Businesses go out of business all the time.
Yeah.
So if you have a downturn in the economy, you may not have clients. Somebody always going to need a place to live, but you don't always need to run a business,
Yeah.
right? So there's that risk. There's the risk of having a large warehouse with one tenant in there. If that tenant leaves, well, you have a large warehouse with no tenants in there,
Yeah.
right? On the flip side, people usually sign 2, 3, 5 year long leases, so that it's not like every year you got to renew them, right?
Hmm.
So it's worked out good for us. I mean, come talk to me about it when we have an economic downturn, and we'll see how it looks at that point.
Yeah, yeah. I think the same fundamentals apply. There's differences. I mean, when things work well, you never have vacancies, and we have in large apartment complexes, we're always sitting with vacancies. So we're always marketing, we're always leasing, we're always performing those activities. And if you got a couple of long-term tenants, you can sit back and just collect checks. But exactly what you mentioned, if one person moves out of a single tenant net lease, now you have zero. So there's pros and cons. Personally, I think the right answer is, both, if you're able to do it. But awesome, awesome. Now, when you're doing these types of deals, what's your main role in these partnerships?
Yeah, it's interesting, right? I'm more behind the scenes in a sense. I'm not usually out there networking with brokers and
Hmm.
touring properties and stuff. I usually have my partners come to me with, "Oh, here's a deal we found.
Hmm.
Are you interested in partnering?" And at that point, I'll start, putting on my analytical hat and my
Hmm.
systems hat and stuff. We talked a little bit about
Yeah.
EOS that
Yeah.
start putting the systems in place because that's where I'm tend to excel, right? It's like, okay,
Yeah.
what does the underwriting look like? What does the capital raising look like? What
Yeah.
does the attorneys, all the back end stuff, I
Hmm.
can do quite well in that.
Yeah.
So that's usually my thing. And I can raise money too, right?
Yeah.
I'm not managing the property. I mean, I'll tour them and stuff like
Yeah.
that. But once it comes to managing the different trades and stuff like that, then I start checking out, checking
Yeah.
out. I don't care much for that, right?
Yeah. And speaking more to the listeners now than to you, Jens, I mean, the skill set he brings to the table is something that applies equally well to multifamily and, industrial and pretty much any other real estate type. That there's certain skills that, are easy to move from one to another, one field to another. I do a lot of managing apartments, which it's a little bit harder for me to move from one to the other, but once again, there's still pros and cons both directions. So for people who are listening, what Jens is doing, it's a lot easier to adapt and change from one asset type to another. What I'm doing, I'm kind of locked into multifamily. So there's pros and cons both directions. You just got to figure out what's right for you in the end. But all right, next question. What's next for you?
I continue to, invest in real estate. I'm still a real estate investor. We are doing a very interesting project here in Santa Fe that is going to be a warehouse conversion into like artist space and stuff. So that's exciting. That's an exciting project. The next apartment deal may be a
Yeah.
little ways down the road, right? We also
Mhm.
have some like, some deals we need to get quote unquote rid of because they're not performing
Yeah.
and they're not, we just got to get out from underneath them. So can continue to manage what we have, add some deals very strategically.
Hmm.
And personally, right, I mean, we started talking about a little bit, I'm also doing earned income through some coaching and consulting. And
Hmm.
so, because I enjoy it and I get it out around people and it
Yep.
pays the bills, while at the same time, the real estate kind of grows, right? So, if we talk in a couple of years, I may have more warehouses. I may have added a few apartment buildings there, but
Hmm.
not nearly as aggressively as as a handful of years ago, right?
Yeah.
Because all that build up cash flow through some of the stuff we own and stuff. So there's a different urgency around it now that there used to be, right?
Yeah. Yeah, definitely, definitely. All right, next to last question. If you had to give advice to somebody who's just starting out, what would that advice be?
Get around people that have done this before. I don't think you can sit behind a computer and learn everything, right? You got to get
Yeah.
out there, right? And I'm a little bit of an introvert myself, but I did find people that were, ahead of me, and I would,
Hmm.
give them some value by buying them a dinner or, stuff like that, and start asking questions and to start learning. So, just start learning people. And it's very difficult to do your first large deal if you don't have a partnership around you of experienced people, right? So what is the value you can add to somebody,
Yeah.
like Brian and myself, right? But don't just call and say, hey, how can I help? No, figure
Yeah.
out about our business and say, oh, it seems like you need some help in this area. And then, if you're good at social media or God knows what it is, give
Yeah.
us some help in that area and we may consider you as a partner in the next deal, right?
Yeah, yeah, and something I think I didn't realize until much later is that there has to be kind of a somewhat equal exchange of value in partnerships. Whether it's a mentorship relationship, whether it's a partnership, there has to be an equal exchange of value. Otherwise, one person is not going to feel like they're getting a lot out of the exchange. So ask more what you can do for them than they can do for you is essentially what you're saying. Yeah. So,
Okay.
all right. Well, last question, and that's how can listeners learn more about you?
So the best place to go is to my personal website, which is
Mhm.
jensnielsen.us.
Okay.
JENSNIELSEN.US.
Okay.
And you can learn about me. You can learn about my different services. There's a link to my real estate website too. And there's you can schedule anybody who wants to jump on a call to talk about real estate or coaching or mentoring or anything, industrial. You can schedule a free call with me there, 20-minute free
Yep.
call. And I've had hundreds of those calls. I'd love to talk to anybody that's out there.
Awesome. And we're going to put a link to that in the show notes for you, Jens. So for those listening today, if you want to reach out to Jens and talk more, he does do a lot of coaching and consultations like that. So reach out to him and if he's offering, all I got to say is take him up on it. So that said, that'll be in the show notes for everybody. Jens, thanks very much for coming on the show today. I very much appreciate your time.
Absolutely, Brian. A lot of fun.
All right.